Hello traders, welcome to another trading interview, this time with one of our serious FTMO traders, Richard from Nova Scotia in Canada. Very warm welcome, Richard. So good to see you here.
It's great to be here, Peter. Thank you for having me.
Well, thank you so much for having you here. And guys, for those who are listening to us for the first time, FTMO is a serious prop trading company that actively searches for trading talents. And we have developed a unique two-step evaluation process that consists of FTMO challenge and verification phase. And once you pass this two-step evaluation process, you will be offered a unique placement in our proprietary trading company. And that is why we have Richard here, because Richard is another excellent trader. He's with us for more than 6 months. He right now trades on account size of $500,000, and on the previous period he had a profit of $23,000. That's around 4% of increase. This is amazing result, and I cannot wait to hear your strategy. But before that, can you say something about you, who you are, and how did you learn to trade?
I've been trading for the last 6 years. I have a knowledge base from Urban Forex. Is where I got a lot of my knowledge base. Then I kind of went my own way with it. I kind of formulated my own place in the market that aligns to my personality. Yeah, so I guess that's pretty well it.
And you are a full-time trader, right?
Yeah. So you are full-time. I own a business aside from this, but I have somebody else that runs it.
Cool.
Because as I progressed into trading and it became more serious, I stepped into trading full time.
And do you have any other hobbies?
Well, I live a healthy, active lifestyle, go to the gym and all that stuff. And,
nice.
You know, just do whatever outside of that.
And you are trading every day?
I watch the charts every day. I don't trade every day just because it's not part of my risk management. Once I hit a set goal for the month, then I'm out, and then I just monitor the charts.
And do you remember your first trade?
I don't.
Okay, and do you remember?
It's quite a while. It's quite a while ago. I remember my first account for $300. And originally, I got into trading because I was solicited by a broker, and he caught my curiosity, and I said, well, I'll see what this is about. After I wiped out my first $300, then I got a little more curious. It only took me about 7 days to wipe it out.
Blown that out. I get it.
Yeah. The rest is history.
And why did you keep it at? Why did you keep in trading when you lost all $300?
As I started to filter out through what's out there and what's real, what's not real, I did end up aligning to a mentor that actually was real, and I seen it actually was possible. And I looked at the numbers, and the statistics were very low for a trader being successful. But you know, that's kind of where I found my element, because that's where I thrive. And that kind of motivated me to get at it and go through the pain and try to get some gain out of it.
And do you remember the strategy that you used on your first account? And if you compare it with the strategy right now?
The strategy on my first account was just a basic support and resistance. I think it was like a doji candle formation. And I did okay with that for a while, but there was a lot more to know. So like over trading and all that came into effect, and revenge trading and so on and so forth. But what I ultimately learned is 1 or 2 trades a day is kind of the best risk management strategy to have. That way it really doesn't allow you to exploit your psychology, you know, to any severe level. Sometimes maybe 3, 4, but it really then at that point would have to be a good setup.
Yep. So it is more
outside of that.
So it's more important your psychology, the discipline, than your strategy.
Yeah. Oh, by far, by far. The minute I started focusing just on performance and performance alone, and the things I can control in the market, like our risk management, it completely changed everything.
Mm-hmm.
Like now, all my equity curves for each trading cycle are all bullish trends, no double bottoms or any of that. Like it was pretty dramatic.
Mm-hmm. And do you have
and having an over
uh-huh.
and having an overall goal for the quarter and kind of rationing that out over 4 months, kind of thing. It really makes you more selective on what opportunities you're going to take.
Yep.
And that in itself kind of makes you drives you to be better, and it's more performance orientated. And then you're focusing on, well, I don't really want to go into any drawdown. Can I find a way to do that? You kind of push yourself a little further into the performance end of it.
And do you have some discipline rules?
1 or 2 trades a day, and once I hit my certain amount for the month, then I'm out. My targeted amount on each month.
So you've got target amount and then only 1 or 2 trades. That's it.
Yeah, 1 or 2 trades a day. Sometimes, like I said, sometimes 3 or 4, but it would really have to be a good setup.
Okay.
In order for me to go into that much. But you really got to know within yourself how much energy that's going to take you, and can you sustain through it? Because each trade, it takes a lot of energy out of you. So you really have to be aware of that, and your fatigue level, you know, how that's setting in. You really have to be mindful of that. Sometimes you don't know that 100%. You have to go by historical data. It's like, I know from having it done 100 times, it's instilled in me that I have to walk away now. And that's kind of part of the skill development phase, I guess.
And when you are looking at your historical data, are you as well backtesting now, or you are not backtesting now?
I do some backtest on the higher time frames when I do like a top-down analysis, like from the daily up. I'll use as credible backtesting, but anywhere downward from that, I don't. So.
Okay, but when you start, you probably need to develop the strategy if it works, right?
Oh yeah, yeah. The strategy I use is more of timing, support and resistance, logic, top-down analysis. You know, timing is a huge thing. If you can kind of corner time down into the right spot, you kind of hit it just right, where you know it can't go any further this way. It's not reality. It's not logical.
Okay.
So the only one scenario that can play out is for it to go one way or the other, which is, you know, whichever way your bias is on, and you have calculated off your higher time frame. So you kind of got to put it all into context. And
it's kind of very interesting that you are searching for some logic there. Can you explain it more?
Yeah. Well, if you look at the candles to your left, and what's the chances now at this time that we could go all the way back up to here? You know, and a lot of times that's where I'll scale in. If a trade is working out and we only have so much time left, I know my risk then becomes less, because I can get out of that without too much of a loss. Because by the end of the day, if it retraces back up and gets to a certain point, I'll wait till it retraces again for another retest, and then I'm out with a small loss. And but 9 times out of 10, if it's already going in the direction and there's no time left, it goes. You know, you only have a limited number of candles in a day, and a limited number of candles in a month and a week, and so on and so forth. So you really have to have a good practical, logical perspective on that. It kind of can be your best indicator as a guide. You know, a moving average is on my screen, but it's just a level of awareness. Stochastic is on my screen, but it's just a level of awareness, just like a volume indicator, I guess. But I really don't heavily rely on it. If it's there, I'm aware, but that's nothing more, nothing less kind of thing. So
Great.
I don't take trades based on indicators.
Well, can you show me your strategy?
Sure.
So let's break down your strategy, Richard. Please tell me.
Okay, this trade we're going to look at here was done off the weekly with the top-down analysis. As you can see here,
it was on gold.
It was on gold, and I took it after we rejected 18, or this area here. We'll see the exact area once I pull it up. But after we rejected this area here, and then the weekly candle then turned bullish, we already had this candle here rejecting, and it was rolling over. As you can see to your left here, nothing has really been able to hold for too long above this area. And we're kind of spiking up out of the range as it is. So that's kind of some of the context I was looking at. Also on the daily, we also turned bullish. They were moving in sequence together, the weekly and the daily, because it was right at the beginning of the week. We hit 1850, came down, and we had already closed on the week before a little bit below the range here, which is, we're breaking outside the range on the daily, which is another good confirmation. So as we started to break the low and I started to corner the timing down, this is where I started to get in. And then I ran that trade down to the top of what I would consider the range here on our daily. And the reason I got out there is because sometimes it can bounce back as soon as it hits the range. And so I was just being a little bit cautious there with that. Because more often than not, if you tried to go too far with it, I find you end up not really making very much and getting out of the set point, which could be considered a landmine, a point of caution, like right here at 1810. Around that area is where I exited the trade.
And what about those indicators there?
This indicator here is just the key price points, which I consider landmines. You see the market hits them and turns around in different spots. And if you correlate those to timing, they can be very powerful, along with a top-down analysis. And that's kind of what I go with. I don't really have a specific type of candle I want to see, so to speak. I'm familiar with how they develop and, so on and so forth, but I have to see it all come into context at the right timing, and then I'm in. But here I did load up on it quite a bit because of all the confirmation we had on the higher time frame. So.
Okay, and you are using weekly and daily chart time frames.
Weekly, daily, and then I keep an eye on the monthly. Like, for instance, right here, we haven't been able to break above this area for the last 7 months. So putting that into perspective and logically using it, place where another trade could have been taken is right here where we opened up. Because we're going to have to make a wick down if we're going to continue up. And if we don't break above here to make a wick to the upside, then the probability is even higher for us to go down. So this here was a good trade. I didn't take it. I've accomplished my monthly limit, and I was just speculating. And there were actually two opportunities here. We came and made the double top, which you don't always get on gold. And down we went.
So you're more of like swing trader, right?
Yeah, I guess you call it swing trader. I try to catch moves that are 200 to 300 pips of the gold. That's kind of what I have gauged. And I'll hold the trade for a day.
For a day. At
the most. Yeah. Sometimes 2 days. I've traded US 30 before and been stuck in a trade, and I've held it because it's giving me indications that it's going to go, and it's not giving me any confirmations it's going to go against me. But I prefer to be in a trade for not much more than a day. Sometimes two. Like if I were to get into a trade up here, anticipating it may roll over, then I would be in it for an extra day.
And are you focusing on gold only?
It really happened. Only on gold. And another confirmation I forgot about to mention here. If you see right where this small range developed, it's right below this range area here. So these buyers are not able to come up and challenge these sellers. Instead, we just range right below. From my knowledge base, that's a good indication that
it will go down.
We're going back down in the range, along with the fact that we closed the week out, the previous week out, closing a little bit below the range, and then quickly moved up to this key area, and then down we went. So the minute we were turning bullish, that's when I got into it, and I knew how I was going to get out of it too before I even got into it. That's another thing, is that I plan exits and I plan, when it goes in my favor, where I kind of want to watch and get out at from beginning to end. And the fact that I'm prepared for that kind of drives my performance as well. It's because then you can be more attentive to the things you really need to be, and right in the moment.
It's very interesting that you have there all those sessions, New York one, Tokyo one, London done, and it keeps repeating. You probably programmed it in MetaTrader. How do you use it? Or do you have some preferred session to trade?
I normally stick to New York, but if a trade is setting up, and it depends on the context again, but like I've taken trades in Asia because I want to get in early, and I just let it run. And I prefer to trade in New York if I can. But if the trade is there and it's developing, it really doesn't matter what session it is. If I'm trying to catch a swing, if I'm scalping, I'll just trade New York. If like my scalp trade would be 100 pips, where I guess other people would consider their scalp trades maybe 10 pips.
Of course.
Like on gold,
it's not scalp. It's more like day trading.
Scalp. Yeah.
But so. maybe with your account size, it's scalp everything.
Yeah. I don't have it like a specific. Am I a swing trader, scalp trader? I know how to trade off the lower time frames as well as the higher ones, and what kind of confirmations I want to see on either one. But right now, I'm just looking for the best trades. I want confirmation on the higher time frames, and then I can push forward into those bigger moves to try to extract a bigger amount, over the course of the day. Like extracting a 200 pip move, for like a scalper that's trying to get 10 pips a day for 20 days, that's their month kind of thing. So to me, it's worth it to have the patience, and then on the off time, speculate and kind of do a post analysis on everything you've done. Normally, post analysis, I already know when I'm in the trade what mistakes I've made. Like once you're in the trade, I think that's common for a lot of traders, but after I get out of the trade, or if I miss a trade, I ask myself, how could I have done it better? And just always be trying to fine tune and maintain a really good edge. And, the market doesn't always give you the same thing at the same time. It'll give you a different variation around a similar time. And you got to kind of align to that. And that's the magic. And it's not any one strategy. It's timing, and it's a lot of things put together that will ultimately help you be a lot more successful.
And the market also repeats itself sometimes, but it's not same. It just repeats. So you need to see if it's have same, indications as previously, right?
I also like to start my trading cycle at the middle of the month, because that way there's 2 weekly candles printed, and I kind of get a sense on what the monthly candle is going to try to look like. I can try to anticipate,
Yeah,
you know, a really good move out of that.
Mm-hmm.
Yeah, yeah, and that's the way I was always taught, is to try to anticipate and not participate. I know you can trade either way, but from the guy that I was mentored by, he said to anticipate and not participate in it.
Okay.
To date, it's been working out pretty good. So.
And what about the volume indicator? How do you use it? It just help you to understand some indications?
Well, on gold, it really, the only thing it can do on gold is help me identify a false move, which is if we're going up with no volume, it can create an awareness that it may just be a false move. And you'd see that on the 1 hour time frame. But it can be more beneficial in Forex pairs to incorporate the volume, because there's a whole strategy behind it, or the way it can plug into a strategy. But with gold, I find the volatility is both ways with your volume, so you really can't always be using it. It's only really ever beneficial as a level of awareness if we're going up with no volume. And just to keep that into mind in regards to what you're trying to execute on, and have that as a level of awareness. But outside of that, volatility is both ways, so it really doesn't plug in the same as it does to the way I was originally taught to use it on Forex pairs. And the reason I got into trading gold is because it's a lot more volatile. And I think with experience, you know, that's kind of what you want to go for.
And what about the last one? That's some moving averages, and you use the crossing for something?
No, I don't. It's just there as a level of awareness. You know, where are we at in the market, kind of thing. But I've never taken a strategy based on it. I don't really pay a lot of attention to it, you know, unless it's playing into a trade, and it'll just be like that extra confirmation on top, kind of thing. But it just seemed at one time I would put more emphasis on it, but now it's just, I've kind of evolved away from indicators altogether, especially on the lower time frames. But on the higher time frames, like the daily, still can act kind of like a guide. Like right here, we have a divergence happening and we're trying to head up. But based on the weekly, we've printed a very bullish candle the previous month before. So what's the logic here for us to then blast through that candle and head up? It's not very logical. What would be more logical is if we made a wick up to the high of this candle and then started making our way back down. And what I'd want to see is Monday, Tuesday, we start making our way up. Here, we start making our way up. And possibly Wednesday, we may spike up and then start our rollover, and then maybe come down and have a bullish or a bearish candle on Wednesday, Thursday, and Friday. And that's another thing, the times a week you got, if you keep an eye on that, you'll notice that we'll be headed one way for the first part of the week, and then we'll have a reversal toward the end of the week.
And correct me if I'm wrong, I think that you started your strategy with a complex perspective, let's say, with a robust perspective, but throughout the time, you just try to make it more simpler. And simpler and simpler, and now you are using like just simple indication, some really confirmation from those indicators, but actually you are using some support resistance, and you are looking at the trends and what the candles look like. So you are making it much more simple. Is that right?
Yes. It's just to try to simplify everything down into the basics of price action, support equals resistance, timing, and just keep it very straightforward. And the biggest thing that I kind of wish maybe I learned earlier or woke up to was the risk management aspect, because that I found in my experience has 100% to do with the psychology of trading. If you don't manage your risk properly, then it can really alter your psychology a lot within the markets.
Cool. All right, thank you so much for this thorough analysis. I have maybe one last question. There is $510,000. Are you going to take this profit split, or are you going to keep going?
No, I'm gonna take that profit split, because now I'm up almost to 6.5% over the first 2 months of my quarter. So my objective is to extract capital over time, not try to get it all in 1 month, because I found if you try to chase it that way, you can end up with a drawdown that you don't like. And I aim to be in profits every month, and I have been for some time. And I'm running ahead on the quarter, so I was happy with that. That was 3 trading days, all green days. And I think in terms of R value, it was like R20 performance and 93% accuracy. So on the days off, I don't like to be lazy. I like to still monitor, the charts somewhat, and then really try to see how I can be better psychologically within the markets. But I found in each trading cycle of the month, taking more than just a day off, or taking like a week off if you can, there's something there that you're really blind to. It's not like the day-to-day where you go shake out your losses, or even your wins can take a lot of energy out of you. But there's something there where I noticed that's not recognizable, that if you take that amount of time off, it's like somebody that's went on a vacation and they say, I can't realize how much I needed that until I did it. And it was kind of one of those experiences for me once I started taking bigger amounts of time off between trading cycles of each month. And I found you just came back a lot more clear, a lot more sharp, and you really shook out some of the intensity that can kind of become overbearing in a sense.
Well, traders, please remember everything that Richard right now said, because that was like bursting out pure discipline. That's amazing. He made only 2% and he said stop. And that's something very appreciated. Really good. Amazing. Thank you so much for saying all of those. Really good. Hopefully you can keep at it like this. You are not greedy. You are not cocky. You just, you're happy with what you have. That's amazing to hear.
Well, what I found is to have this goal, and then, have a realistic trading amount. Like I looked at what's on average, what's a pro trader make a year, it's 50 to 80%, maybe 30%, but it's within those realms. So the minute I stopped trying to think, okay, we're going to make 100% a year and all this, and just stuck to a plan that was going to keep scaling up the account and have that as a basis for, what I want my goal to be and where I want to be in 5 years. Like, because if you keep scaling up, to me, scaling up with a more realistic percentage is a lot easier on your psychology than it is to try to
pass another FTMO challenge, right?
Oh yeah, do that, and going for hundreds and 200% and all this. It just really, to me, what it would take to do that, you'd have to be half a trader and half a gambler. You're always taking chances that you don't really think you should have taken. And what I found is just sticking to the 2.5% average. You're always in full control of your trading. You're spreading it out over 4 months. You're kind of eliminating a lot of that, any kind of fear of missing out or taking bad trades, because you have time. If you take a loss, it's not that much of a big deal, and the losses that you do take, they're ones you've been in control of. So you really do view them as just an expense of the market. But if you've taken a loss or you've made a mistake, it's a whole different psychology behind it, because it was the human error, and it's not as easy to shake out at that point. And to try to, over time, then ingrain the habitual mind with these good habits, you kind of have a default of everything, which kind of, then you can keep pushing further because your default is not going to let you get too far out of hand with any one thing.
And how do you manage the losses?
How I manage the losses is that when I get into trades, especially on gold, I'm set 1 to 1, 1 to 2, because sometimes it can spike up, and I'm just reading the context of the market. And then if it gives me a signal that it's not going to play out, or I see what I don't want to see, I'm out with way less of a loss. And that's how I found I can kind of end the month, like this month, this most current month here, with R20 and 93% accuracy, is because I'm focusing more on the things I can control other than the R's. The R value to me and my trading style isn't, you know, you have to be logical with it, but to be able to keep your stops wider and just monitor price and be able to have the discipline that when it doesn't show you what it needs to show you, there's only so much time to move. I'm out. I'm done. I'm out. Right. And just really manage it and control what you can control. Always like put a heavier emphasis on, I'm going to control what I can control. I'm there to perform. And that, you know, if I see what I don't want to see and I'm out, you know, the emotional aspects of that are good. Like you feel almost like you won in a sense, because you're there to perform and you perform. And I've always found when you're trying to chase something or have too much expectation, that's when you can get into a lot of trouble and make mistakes, and then not ending up performing well or getting a win you don't feel you deserved. You know, it doesn't really feel like a win at all. Ultimately, when you're trading this kind of capital, I think you should be able to feel like you deserve to be here, kind of thing. Like you can, certainly, you can control 100% of what you're doing and how it's going to work out. And that's exactly why I distribute my trading goal over the quarter. You know, I give myself a soft goal to achieve the 2.5% within the first 2 weeks. If I don't do that, okay, I got another 2 weeks. And that really is setting it up to make it a lot easier to hit this goal, this overall goal over the course of 4 months. Because then I'm kind of disarming fear, missing out, or any other psychological thing that's going to present itself. I'm kind of making that journey a lot smoother in the risk management approach. And when I get to my overall amount on the quarter, if I'm a little over, I don't even try to risk that to get more, because I don't want to train my mind to get into something and then I'm like setting stops to break even, then I take a loss. There's still, in a lot of cases, psychological repercussions behind that. Is where you try to get in and it took you out. There's going to be, you know, a psychological repercussion for that. So I just try to stick with the overall objective, and I'm on a mission, and this is what I'm here to do. And
yeah, let's go for it.
This is how much time I have to do it. And, you know, you get in and get out, and you have to always have that air of caution and know that, you know, only 5% or 1% or wherever it's at now of traders fail, and you got to ask yourself why. And another thing is that you got to ask yourself, what kind of trader do you want to be outside? What kind of person do you want to be outside of trading? Because do you want to be the guy that hits these huge numbers and then 5 years down the road you blow it all because you're not in full control of your psychology all the time? You're not doing it. You're not focusing on your psychological aspects enough to sustain you long term. Like, or do you want to be the trader that in 5 years time is scaled up and felt like they deserve to be there? They have like right now, I looked at it, I'd have a $15 million account, FTMO account, if I hit all of my trading goals, and you know, extracting $4 million a year.
Well,
And that's really something where you can look at and say, oh, this is realistic. And then you get more excited about it. And it's the same when you hit your target over the first course of the couple of weeks of your trading cycle, then you get excited for the next trading cycle. You can't wait to get back, and you've kind of built that trading nerve back up. And the fact that you're distributing it over time, you get back in the game, like you're because you have time to do it, and away you go. I've seen other trading mentors that have taught people, and their feedback from a lot of traders is that the minute they changed from doing 10 trades a day to doing 1 or 2, everything changed for them. It really didn't allow them, the market, to exploit their psychology. I think it can be most definitely different between person to person how many trades they can take, but as a generalized amount, that's the feedback that they had. So that was something I took into consideration when I first seen that.
Well, guys, if you have listened this was a speech of a professional trader. I really cannot add anything else. I really cannot say something more. This was very inspirational, and thank you so much, Richard, for it. Really thankful. And well, let's briefly take a look at your results, please. Okay, so what can you tell me about this chart?
The biggest thing here that I look for in the account matrix is the equity curve. I like to keep an eye on that because that can really tell me how much control I have on my trading. And based on how I was taught by my mentor, your equity curve should look like a bullish trend with, small pullbacks. When you get into situations, you're not over risking, and you're really making the best out of the ones you have, and up you go, kind of thing. And then as I was, I had made more than enough for the month, so I really wasn't over risking at this point. And that's why after we had this initial strong bullish move, that we continued to just trickle up, because I wasn't willing to go into much more loss, because I had already extracted much more than my monthly goal. And it was mainly from the bigger trade, as you can see here. One day really made up for a lot of the month.
Yes, you just made a really big rise, and then you try to trade a little bit loss there, I can see, just to keep in the trading mindset, but you didn't want to risk more, right, after this big rise?
Yeah, just remaining very cautious and just understanding that, okay, I've had this big win, I've taken this many trades, where's my trading nerve right now? I find that you get into a trade and you feel like, oh, I'm losing my nerve, then it's time to step back for a little bit, because different times I found, like even the last trade I took on the current month, I was in a trade, it gave me the confirmations, it started to go, but then I wasn't seeing the right amount. I got out with a small profit. I could feel my trading nerve going, but it also was giving an indication that it's moving at an unusual time in an unusual way, and I was out. And sure enough, it spiked. It was just a false move down after a false move up to begin with, and then it continued to go up. So it took everybody out that day, and I ended with a small profit because I was focusing on what I could control. And the minute I felt like my trading nerve was gone, because I had already taken a certain amount of trades and identified, well, maybe I need a day off now, and then got out of the trade, and I wasn't seeing what I wanted to see. It was just all right there, and I was out, small profit, instead of taking a loss, because it took everybody, it popped out of the range to the upside, came back down in. That was a good confirmation to go down that I had already planned for. And as it started to go down, even though I got a good price when it popped out of the range to go back down in, because it was part of my trading plan, as it started to break through the downside of the range, it was going way too fast at the wrong time. and it's just something wasn't right about it. So I said, I don't have any more energy to exert into this, and it's not giving me what I want to see. So, you know, it's kind of like that back performance is that I have a good trading history that over time, I find the more you do it, the more it's instilled in your identity. It's just the kind of trader I am. And each month you can, if you have some time off, you can look at your trading results and you say, you can kind of identify with them somewhat too in your time out, and feel the results and feel like get the profits and really recognize it. Where when I wasn't with FTMO and I wasn't doing the weekly withdrawals, it was just, you weren't really creating an identity with it. It was just, it was a win or a loss, and it was a completely different process.
Mm-hmm. Well, what about your statistics? Show me, please. Just right below that. Yes, a little bit more. And if you can tell us also, yes, is this. And if you can also tell us what are your long-term statistics, if you remember those and calculate them.
The long-term statistics?
Yes. No. That's like right now we can see that from this trading period, your RR was more than 2 and your win rate 80%, which is amazing. But I am interested more in your long-term statistics. If you know that your strategy have win rate 60 or 70, and what about your RR?
Yeah, I don't focus on the R's. I focus on getting in a trade and managing well, and I'm out. Like I set it to 1-to-1 or 1-to-2, depending on the setup. And then I manage the trade from beginning to end, and I'm out. And it's just really ingraining, focusing on what I can control within the markets, and leaving it there, because the only reason I have a stop that wide is anything can happen, and you always want to protect your capital regardless as to whatever, or how much you can read the market, or whatever you think you can do. You always have to protect yourself to a degree.
And as you said to me earlier that you are opening only like 2 or 4 trades, I can see here that you are opening a lot of them, but that's what you said, like you just want to trade something. Tell me.
Those are several positions on one trade. So several lot positions on the same trade.
Okay.
It's a scaling method. As time starts running out, a scaling a little more, scaling a little more. It's all on the one trade.
Yes, I get it. So that's how you meant the one trade, of course. Cool. And what about the statistics of your instruments? What did you trade and at what time and more? That's below all of this. If you can take a look. Yes, this is much more below the trading exactly here. So as I can see here, you are mostly profitable at 11 o'clock and 13.
That 13 would be the New York 11.
That's before the New York session.
Yeah, 13 is New York and New York Stock Exchange. 11 is London. So if it's a big move and it's happening early on, like the one I showed there on the charts, I think that was in London hours when it initiated. But
no, this is the CET time, Central European time. So
oh, is it?
Yeah. So you were mostly profitable during the London session time, right? And so I'm just asking, like, if you could tell me, for example, why in this trading period, why you were that profitable. But you said it earlier that you doesn't care about this, right? If you see the setup, you just open it, and it doesn't matter at what time it is, right?
Yeah, because it was setting up on the overall higher time frames. You know, in that scenario, I'll get in Asia, London, and you know, a lot of the move, as you can see, happened in London for that particular move, and then some good smaller trades that are intraday trades or scalp trades, whatever you call them, where I was assuming lesser risk, were done in New York. if I'm just going to want to trade one session, it'll be New York. But if it's an overall bigger move happening on higher time frames, I could get in any session. Okay. If I see it starting to develop and I want to get in earlier so I can really be able to manage risk. That's another thing is that getting in early isn't always a bad thing as long as you know how you're going to manage your risk on the way out. Because you're really then trying to master the anticipation aspect of it, and your analysis you've done, you really should be on point with that if you're going to anticipate.
Great, great. Thank you so much for this breakthrough of your strategy. Thank you so much. Oh, let's go for our interview, please. All right, another great result from our trader. So now just tell me, do you have someone who inspires you in the trading community?
Not anyone in particular. When I first got into trading, it was the mentor I had. It really inspired me that they were really able to extract that much capital, and their skill level was really admirable, and their level of emotional discipline, how they could rule their emotions, was really something very different and lots to be inspired by. And where I'm at now evolved along in my trading. I try to just be better than who I am the day before.
Right.
And just kind of extract inspirations, anywhere I can along the way.
Around the place, right?
And always be a student, always, kind of try to be humble and that the markets can change and just to always be aware of that.
And if you are humble, please tell me, what is your vision? What is your humble vision what is your humble vision in your trading career?
I don't know if that's a humble question, but yeah, my goal is to scale up in the next 5 years to a $15 million account and extract $4 million a year, and keep focusing on what I can control within the markets, and because the markets are always there, and you may not be if you don't manage your risk. So
I believe you can make it.
Yeah,
I'm sure of it. And do you have some enlightenment or guidance to our traders?
Enlightenment or guidance is to focus on the things you can control, which is your risk and how much time you're going to extract capital, and try to break it up over time and make it work for your psychology. And really put a level of thought into what's the loss actually doing to me. Is it just driving me to have another loss eventually? Or small losses here and there that don't need to happen? How much are they really affecting my trading to have other losses? Because once you can, a lot of people are good traders. I think they have skill and they can execute great. It's just they need to weed out that certain amount of bad trades that they don't realize is that detrimental to them over time.
Great.
And that would be, I guess, the advice I would have.
Well, thank you for it. Thanks. And well, what can I say in the end? You raise so many interesting points about logic, about reasonable trading, about discipline, about everything in trading. You are certainly a professional trader, and I'm sure that you're also very calm and patient trader, which is very, very good skill to have in trading career. And your remarks on trading were very insightful and inspirational. So again, thank you for all of us. And even though that you are an excellent trader, and I think that there is always place to learn new things. As you said, that you are a student. So, well, you said it, you are a student. So keep at it to be a student. Because if you are going to stay as a student, you can always learn. And that's something that you cannot pay for it. You cannot buy it. It's for eternity. So keep at it, please. And I have one last thing to say, that if you are trading on $10,000 account, and if you are trading on the $500,000 account, if you are going to maintain the same strategy, you can make a lot more, and you know it. So this is more of an advice to other traders. Maintain the strategy. Nevertheless, you have the $10,000 account or $50,000 account, it doesn't matter. Maintain the same strategy, and I trust that you can have the same result. So just trust your strategy. This was my special advice to all of you. And do you have any last words?
Yes, Peter, it was an absolute pleasure. Thank you for having me, and it was great to be here.
And that's FTMO.